Good morning, everyone. Hey, it is Shooter, and we're going to go over primary waves here. It is September 8th, Sunday. Of course, at the end of our presentation, please do review our disclosure. Okay, we're going to go over growth stocks for September, go over a little analysis on those. This bear case this week, I think there's a good chance it sticks. Looking at the history of September, typically we average about a 5.8% decline. One of the big losers here that I don't think everybody's really squawking too much about is Bitcoin, and really how bearish the chart looks. Now, I really do hope that some of you actually did take that hedge that I put out last month, to buy the $100 or the 150 coin puts. Right now those are up to about $600, where the 100s are about $600 a contract, whereas when I put those out there, they were just a little over 200. So of course that idea did work. Once in a while I get a home run. I would consider that. So now the technical levels here, I got some specific things I outlined in primary waves this week. I like 405 on the NASDAQ, which is about 9% down from here. And then I liked 510 on the SPY, which is about 9.4%. So the counts, mainly because we didn't have divergence in the past counts, suggests to me that we might get an overshoot on this downtrend. So that's sort of my thought. So now I stuck to core names in the growth stocks that were held up well during what route we did have last week, and I think they'll hold up well. So I think sticking to the relative strength is probably one of the smartest plays here. So that's sort of my suggestion. All right, let's start off with New York Community Bank. Kirk was dead on with this. Boy, I didn't actually put anything on at 250. I wish I did though. We're going to be heading towards this target wave 3. As long as this flag holds, there's a good chance we get 50% back first. I would say with that look and the breadth of the current candles, I would say probably not, but there's still a likelihood. If you don't have a position, I would wait till we get a breakout of this particular candle just above 11. Because there still is room to chase this to the upside. That's sort of my thought. All right, let's talk about AST Space Global, because everybody and their mother sent me a text. Okay, right now the B has really drifted lower. It looks like it's going to back test the breakout. Now with market weakness, I can see that, because that's the key here. Market weakness is the lead indicator and nothing else matters. So if we're selling, we're selling. It doesn't matter what the name is. If they're selling Apple, they're going to sell AST, Space Global. So our bounce should come around 24.73. Then we should push back up to about 32. So that should be your spot to trim if you want to trim. Hopefully we get that. On a retrace, sometimes it doesn't give us. In other words, we don't hold to a standard of, an average retrace. So the 61.8 isn't in play because there's no bias to bring us to that move. But ultimately, our B target should be around 16.50. That's a great spot, which is much lower than what we were seeing last week or the week before. So that's the thought on AST Space Global. All right, Square. Actually, we look pretty decent here. I mean, we did pull back just a little bit with markets, but it was insignificant as far as I'm concerned. So sooner or later, we're going to get out of this base, the lower end of the channel, as long as we don't take out this low right around $40. We have this band channel, which, by the way, I added my support and resistance bands to the charts this week. Now, these are Elliott wave highs or low. I really don't care about other demand zones because all they are noise. And then, they're marked by the off number of those candles. So in other words, the close of that candle is what I'm marking. So, in this particular band, this was the breadth of that low on that wave. This is the breadth of that high on the, that's also high because this is the top. The little blue band is support. So really, we don't have a lot of seller exhaustion down here on the prior lows. It's not aggressive. If that was 3 times as wide as that, yeah, we'd have seller exhaustion. Here we had, okay, buyer exhaustion, but it wasn't to the extreme levels or overbought level like we've seen with some other names. So we want to always look at that because I think the breadth of those candles makes a big difference on really how strong that position is, whether it's going to move in our direction quickly or not. And I personally would rather chase stuff that's going to move in our direction quickly rather than something that is not as motivated to the upside. And obviously we've tested this, tested it. We bounced decent, $60 is a decent move. Okay, so the breadth of this band is pretty long here. So we're approaching that bottom. Right now it does say we have a new primary wave set up at that 55 level. Just make sure if you're going to take a shot at this, I'd sell $50 cash secured puts. Just be safe where we are in this market, so give yourself some room. And then if we do get another low, 52, 53, or even get down to $40, sell another lot. That's what my suggestion. All right, looking at Caesar. Now we got this primary wave set up. We back tested it. I don't really like the weakness. The volume is increased here. We're definitely getting some buyers in here. Not quite as aggressive as here, as this flush. Obviously that was a beautiful flush. Have some minor support right below us between that 30.99 and 29.15 band. And then our next level is way down here at the end of the world. We are close to the vulture levels here as far as an entry. So, not a bad place to give it a shot, but I would wait until we get beyond this September route before I would do that. But we should ultimately get back above our resistance band, just above $50 here at some point, and then head towards our primary wave 3. That may not be till next quarter. And truthfully, it may not be till the Fed has cut 75 basis points or more, because that will push some liquidity into the market. All right, looking at Quick. It's got a little bit of room to the downside still. I've got 568 as my count for my back test. Now realize this is testing the lows. We are below the entire count, the chart history support. So we've already broken down below there, and we've already rejected higher prices once. Now, this is a ABC pattern, and the challenging part is what's going to come after this 5. But right now, from that 568, selling some $5 cash secured puts probably would make some sense once we get down there. Should be there pretty quick. Now, we're going to put it in on this. This is the one we're going to get a decent bounce to maybe $10. That's a $5 move. That's, a double. As far as options are concerned. So you could actually come in here, and I didn't look at the strikes, forgive me. But you could buy a $7 or $8 call once we put in this 1, which should come in around 650, and we should get a decent bounce to the upside. Just give yourself some room, because once we get this final flush, then we should start a decent push towards the upside. That will probably coincide with the end of this route that we're going through. I don't know that it's going to happen next week, and I don't know that it's going to happen the week after next. We did have some buyers come in. We'll see. I think we need some kind of positive news, quote unquote, really to turn this around in September, because everybody and their mother knows that September is the worst month. And what is it? September 8th. So, heck, we're not even halfway through the month yet. So let's see what next week brings us, and then maybe make a decision on that off of that minor wave 1 on whether you want to chase that for a quick swing trade. And that's something I'm watching as well. All right, let's look at MP Materials. Still a tad bit lower, but I wanted to put it up. In other words, I want you to get primed to look at this at about 978. It held up really well last. And, I noticed some minerals and material companies, industrial stuff held up better than not. So we had that flight to safe in some names, and with some decent breadth. They just stayed the heck away from tech and AI. That was what really pushed the sell-off. So once we get in that 978, so maybe $9 cash secured puts down there, my first shot would be 50% back on this leg, or this B here, around $34 is what I would look at. I would not take calls that far out. I would stick around 15 to $20, and I'd give myself 90 to 120 days or more if I was not going to do cash secured put. All right, let's look at AAOI. Chart looks good. I don't like that last candle right here. Sheer higher price reject. See the breadth of that candle where we closed on the bottom of that candle? Reason I say that is because whenever you see us close towards the bottom side of the barrel, what follows? Get another candle. Most often you get 3 pushes. So that's 1. We should get 2. We should get 3. So provide that 100% fib holds there right around $8, $8.50. I can't quite see that far. Then, maybe we should continue towards our wave 2. But realize I'm looking at this as 50% back. I didn't measure it from that level. And this is shallow rejection below the 3826 fib. So to me, that sort of warrants weakness. Then if we come in and look at our Bollinger Bands, the breadth here, how we put in this high, we're squeezing, popped a little bit higher, it's probably going to roll right back over, and these will end up getting tight here at some point. But that might not happen out till April 2025. So this little market route could have just squashed this bull run or this push to the upside, and then we roll back over, put maybe a flag in here, find a bottom towards that 105th, and maybe the end of this year, first of next quarter, and then we go. So if you're holding in AAOI, I would not hesitate to sell some $15 covered calls. I would not hesitate because I don't think we recover that quickly. Now, obviously, at the end of next week or the week after, we have started back in the bullish leg, and this was sort of just the route, took everything off, and it's going to recover quickly. That's a different ball game. So in that case, close above that candle would get me out of that trade if I would take it. All right, let's look at Generac. All right, we're testing that breakout line. Really considering the breadth of our candles, I mean, we've had deeper drawdown candles, so I would consider relative strength a little bit because we did hold the potential breakout. But what I also don't like here now is that our 3 is up here around 203, and our wave 4 is back around 127. So if this tightens up because of market weakness and that route really hits us, this just could stay flat, stuck right in this band here, and say, resistance is right above us, which is this period right here. You back tested it, tested it again, and then it failed. So getting above this is going to be important, and holding above that. And the fact that our drive 1 and, excuse me, I have my lid seeing that, between our drive 1 and our drive 2 in the primary wave, that could just extend this out further. We've already had an elongated flat for a bottom here. So, I would hold, but I wouldn't hesitate, selling some 145, maybe 150 covered calls if I had that type of position, just to insulate. And realize that's your game in a market like this. Just stay shallow on time, 60, 90 days out, and that should give you some additional revenue. So, but that's what I have for this month on primary wave growth stocks, or Kirk's punch card growth stocks. And we will catch you folks next time. Great trading, and you all have a wonderful week.